All right, my beautiful people. A very good afternoon. We are now going live again. Yes, so welcome to this live stream today, and I'm very happy to be here with you guys again. Now, I hope you had a very wonderful weekend, and we are moving on well with the week, second day of the week, and I'm feeling as like a positive energy is vibing around everyone today. So today I'm just going to handle some few things here, and we go through the market and we see what we can do about it. All right. So today, if you look at the title of the video, saying that today we are teaching our beginners, and we are learning a lot today. Apart from analyzing the market, we are going to do something called a walkthrough for the beginners and giving them the way forward, strategic way forward. Before I proceed, let me first notify my community. All right, just a minute. Let me notify the community that we are live. That we are live. All right, community. Perfect. Remember, our community is TradePilot. Is in the Play Store app. All right. So you just have to do look at the screen that I've attached besides there. Go to Play Store and search for TradePilot. And you get the app right there. Just give me a minute. Let's update this to the community. Let's update this to the community. All right. Yes, guys, we are back, and let's now kick off. Perfect. We have made the updates to the community. We have sent the updates there, and I hope you are all joining there in one good. So today we are going to look through the gold market, and we are going to look at it as beginners. So let me just find an empty and a clear chart on gold and see what we can get today. Let's use this Forex.com. Yes, this is a very clean and clear chart. As you can see, there's nothing on it. So we want to go through it and see if we can pass some knowledge to other people. Number one thing, if you're a beginner, gold might not be the best commodity for you to trade because of its volatility. It is very volatile. The volumes here are very crazy. We'll advise you go to maybe some currencies like GBP USD, the GBP JPY, USD JPY, such currencies, the base currencies that we have, not the base currencies like the common currencies that we have in our countries. But for this, in our TradePilot community, we majorly focus on gold, but we also touch sometimes on the currency pairs. All right, perfect. So let's go through this, and let me just first enlarge our screen. Remember the screen that was attached there was a screen for, what do you call this, our TradePilot community in Play Store. Nice. So we have a larger interface at least for our community. All right. So let's get rid of that. Nice. So this is a plain chart for XAUUSD, majorly known as gold, against the US dollar. And we are going to analyze this market perfectly and see what you can get from this market. The first thing is what we call a top-down analysis. You first have to identify the trend of the market. What is the current trend of the market? And how do we identify the current trends of the market? All right, perfect. So for the trend of the market, you either use the daily time frame. All right, I mostly use the daily time frame to identify the trends of the market. Perfect. So when you look at this market on a daily time frame, you can see that the market was initially going up. You see, it formed here a higher high, came and formed a lower high. It went again and formed another higher high, formed a lower high. But now the character changed, the movement. So right, there's a change of structure here in the market. It now came and formed a lower high, then came and formed a lower, nice. It formed a higher high, it came and now changed the character around this zone. Let me first mark this. Stop there. Let me mark the zone that I'm talking about. I'm talking about this zone here, where the market changed its character. Not the character, changed its structure. Because you see, it was forming a higher high. As the market was moving upwards, an uptrend, it was forming a higher high. But now it reached at this point and it changed its structure and started forming a lower high, and now came and formed a lower low here. It formed another high, a higher low, and then a lower low, and then it proceeded like that. Now it is now at a common area of interest here in this zone here. This is an area of interest. We can call it a point of interest. POI, point of interest. All right, let me label that. The market, sorry, not put the cursor. Nice. So the market came to this point of interest here. All right, this is a point of interest. You can see the market it consolidated here. It came and retested at this point. It came again and tested here and touched and moved up, and then it came again, and now it is consolidating around this area. That's the daily time frame. So the market changed its structure, started going down on the downtrend. All right. Now, when you go to the 4-hour time frame, let's go to the 4-hour time frame, and let's see what the market is showing us in the 4-hour time frame. So remember, as a beginner, the first thing to identify is the market trend. Is the market moving up or is it going down? And you do that on a higher time frame to identify the trend, the trend of the market. All right, you do that on a higher time frame to know the trend. Now and there, you go now breaking down in lower time frames, lower time frames. So we are done with the daily time frame. We are now on the 4-hour time frame. All right. Now, I forgot to say something. On the daily time frame, when checking on the trend of the market, now this is where we use the trend lines, all right? So the trend line touches the key zones, all right? For example, let's draw a trend line here. If we were focusing on the uptrend here that was happening here, we will draw this trend line from this zone. Sorry. We will draw a trend line from this zone here, touching this point of interest. All right. Here, our trend line could pass here, but now whenever the trend line is touched or the market touches the trend line or breaks the trend line always adjusts itself. All right, it adjusts itself. You have to adjust it. It does not stay constant in one place, so you adjust it so that you find the trend of the market. But now the trend changed because you see it came to a downtrend. Sorry, let's get rid of this this one there and that one there. So you saw that the trend of the market changed here. All right, so it became something else, totally different. The market changed its trend around this zone. So there are different reactions or changes that happen in the market. You don't stay constant because the market does not remain at one point. It is a moving commodity. Now let's go to the 4-hour time frame. I was just trying to tell you about the trend line changing. Looking at it. So let's get rid of this shape here, and now focus on the 4-hour time frame. So I've already identified that the market was becoming bearish on the daily time frame because of the break of the change of break of structure that happened around up there. Now on the 4-hour time frame, you can see there was still a continuation of the lower of the bearish market. All right, the market was continued moving on a bearish momentum. You can see it formed a lower low, a higher low, lower low, higher low, lower low, higher low, lower low, higher low, lower low, higher low, and so forth and so forth and so forth. All right, see the way the market is moving. Perfect. So that's the current trend of the market. Is forming higher highs, higher lows, and lower lows, higher lows and lower lows, higher lows and lower lows, and that is the way the market is moving. So this means that the market is still on the bearish movement. Now, when we come to the lower time frames, there are factors that we have to consider when checking the market. Number one is that the break of structure we have seen. It shows us direction of the market, where the market has changed, its direction or not. The other thing we check is the change of character of the current market or the current movement in the time frame that we are at, and also the order block zones, which are the areas, specific areas that cause some certain movements in the market. All right. Now, we are currently at this point here. So, if someone asks you to identify what is the order block zone that where is the OB, the order block that caused the movement? In TradePilot, what we identify is the movements, the previous movement that causes the rapid movements to change, maybe the change of the character that causes the change of the character in the market. Those are the things that we look at, that we identify as the key zones, as we identify levels in our market. Now, for our order block, this is the area we're going to mark, because you remember this is a zone. This is a zone that caused the movement of the market to change the character of the market. This one here, all right. And you can see this one is really respected because it came again and tested there, and we expect it again to come and maybe somewhere around here and do the same thing that it did there. All right, perfect. Now, this is our order block that we have identified in the current time frame. All right, we are in the 4-hour time frame, and you know the market is on a bearish movement or momentum overall. But now we look at it. It changed the character here. What I mean by the change of character is here. All right, the market was moving downwards. All right, so we expected not for it to form a higher high, a lower high at this one. For example, look at it. The market was supposed, it went up, it came down, it came there, it never broke it. Now again came here. We expected it to come to around this point and continue the trend. But now the market came to this point and passed this structure. All right, and continue forming another pattern here. Now this zone here, I think let me use this. Right, so this is here now where the change of character happened. We call it, this change of character, we call it church. All right, this is now where the change of character happened. Now this zone, because the market changed its momentum a little bit, not on the higher time frame, not on the overall movement, but on the current time frame that we are in, or then the movement that we are in, it changed the character here. So this change of character, what caused this change of character is now this movement from this zone here at the order block zone. All right, so that's now we call it the change of character. That's how we identify the change of character. Are we together up to there? All right, you know, I'm trying to be a teacher today, and I'm asking my students, are we together? Perfect. Now we have identified or learned how to identify the change of character. The change of character always happens when there's this movement on the change of the current structure. Let's see if I can identify change of character here. Let's see. Yeah, it happened a lot. It happened really a lot. Like here, the change of character here. No, it happened a lot. All right. It happened a lot. So I think you can now be able to identify the change of character in these zones. All right. So after identify the order block, all right, we identified what are the zones. So which means this is one of the key zones that are going to watch out in this market. All right, in the current movement that we have in the market. This is the current place. We're going to watch out in this market. Totally perfect. So I love identifying my zones as that way, and marking them. Whenever I see a change of character, I always mark what I see interesting in the market. So I mark it like that and see where the market tested and retested. Then now I expect another movement to come to around this zone here and test there and come maybe to this zone, test, and now as we proceed. That's one of the way I make my identifications of the movements in the market. So after we identify that, we now go to another to a bit lower time frame so that we identify the current movement of the market. All right, because watching price action in the higher time frame is is a bit impossible. Not impossible, but it is a bit tricky because it can be deceptive at most. All right, perfect. Now we go to the lower time frame, that is 1 hour. I'm using the key time frame that I use, so let me just get rid of this so that it does not bring a lot of confusion. All right. Now you see how our market is well labeled off in this current in this structure. This is now how our analyses are getting well and perfect, and this is how we get our entries in the market. So after we have identified all this, we have known the key levels, where to watch out on, where to check out, or what the point of interest. Now there's another aspect that I want us to identify in the market, something called the a fair value gap. All right. So in most cases, we don't say that these are the things that happen in the market all the time, but we just use terms to identify them. If you see the ICT concept they're trying to apply here, so that the gaps that happen in the market that needs to be retested, that needs to be filled before the market movement continues. Now let's identify some of the things that we will confirm or confirmations. Now a fair value gap is one of the it happens when let me just try drawing something here. Let's say this is our candlestick. All right. All right. Let's use a let's use our common red color. Common colors that we use. All right, so we are trying to make us understand about a fair value gap, what a fair value gap is. All right. Now let's say this market is moving on a bearish trend or on a downward trend, downtrend. Perfect. Then now see Oh my God, now we have that. Forgive me on this concept, display are not too good in the drawing, but I hope we're going to understand each other here. I'm just trying to illustrate. What we mean by either like that. So all right. So what is an FVG? What is a fair value gap here from this illustration that I have had here? Okay, I'll leave it at that point. Now, the fair value gap here is you see the beginning of this candle this week here to this week here. This zone here is what we call this zone here is what we call a fair value gap. Why? Because it is a gap that has not been retested by the market. The market continued moving on a downtrend. From here, it continued moving on a downtrend without right, where is this? Oh, here, the arrow. So the market continued moving down without going back to fill in the gap that we have here. All right. So let's identify this in the daily market so that we can understand, we can have a good clear picture of what we're talking about here. All right. Let's identify this in the real market so that perfect. Now, let's identify this in the real market so that you can see what are we talking about here. You see, for example, there's this movement here, but currently I don't think if we have any fair value gap. I think we have one here where the market is currently closing in at. You see this zone from here no, this from this zone to this zone. Let me change the color of this thing because I don't like that color. Let's reduce its opacity a little bit. Now you see from this, though the market is closing in quickly on that, from this candlestick, this blue candlestick around here to this candlestick down here, that is a fair value gap because the market moved down. It has not retested back to that zone to close that gap. We call it a fair value gap. But now, once the market comes back and tests up here in this zone here, it becomes invalidated. That now does not become a fair value gap because the market has filled that gap. All right, so that the gap helps us mostly to identify where the market can go, gives us the probability of identifying where we can get the next the next movement, or where we're anticipating the market to go in the next movement, or in the next hour or so, or in the next minute. All right, that's how we identify the movement of the market. So for example, in here we saw there was a gap here. This was a very huge gap down here. Yeah, this was a very huge gap. Here, this was a very huge gap here, but the market came back and tested back. You see, we expected it not just to come and fill this part and come down here. When you look at this market, it is impossible to find where the market has not filled the gap. It must fill the gap. It happened here. There was a gap here. There's a gap there, and it was filled. Even if it's not at that moment, but it was eventually filled around this zone here. All right. So those are the one of the key things that we use to identify the market movement, where we expect the market to move back to, or where they expect the market to move against to, which side will the market go again. We use such components or such things to identify the market movement, or the expectations, the anticipation that we have for the market. So once you understand how to identify those gaps in the market, it helps you build up the confidence you have in the market movement or the direction of the market. All right, since we are done with that, the fair value gap, let's move to the lower time frame and we see, because we want to get an entry so that we can continue finding good trades and continue maybe cashing in these things. All right, so this is a buy zone. All right, not a buy zone, the order block that we identified in the 4-hour time frame. Perfect. As you can see, the market is moving on perfectly well and nicely. All right, the change of structure, change of character, and all that, it happens here. All right, perfect. All right, let's go to the I like moving from the 1 hour to 15 minutes directly, because now this is where I mostly find my interest in the 15-minute time frame in most cases, or the 5-minute time frame. All right, so having this, we have now seen the momentum that we have in the market. All right, this is what we are expecting. This is what we are seeing, watching at the market right now. So we are, after going through all that, analyzing all that, looking at the fair value gap, the change of character that we have seen, the change of the break of structure that we saw up there, and the order block confirmation that we see here. So I call this a buy zone, because this is the zone where the market comes and reverses. It comes like a support level. All right, now the support and resistance that I had forgotten to mention. Now the support and resistance, anywhere the market moves back, or the trend of the market changes, or the character of the market changes, that becomes either the support or the resistance. Now the point that causes the market to move bullish, that is called the support level. All right, because it has supported the market from breaking through to another point. Sorry, that's what I wanted. Is what I wanted here. It has prevented the market from breaking down and brought it upwards. All right, now this, let me illustrate it. Let me illustrate it from somewhere. Now, where is our support here and where is our resistance here? All right. So in this case, this becomes a support. Why? Because it has caused the market to move upwards, the bullish trend. All right. Another support is here. This is a support zone. Another support is here. This is a support zone. Another support is here. All right. Now the resistance. Any point that makes the market move bearish, here, 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 that is a resistance level. Those are the resistance level. Those are the resistance level here. All right. Are we together with that point? Perfect. Now let's go to the real chart and see support and resistance. Remember, we label this part. This becomes a resistance. All right. It resists the markets from going on a bullish. This is a resistance. This is a resistance. Now, it makes the market move downwards, like it gives it the pressure to come downwards, where the sellers are very many. They're resisting the market from going upwards. All right? Perfect. The support. This is support level. This is support level. This is a support level. The buyers get the strength to make the market move upwards. This is support level. This is a support level. All right. So, for us to find the resistance, for us to use the resistance and the support to make trade decisions, it is very important. Do not ignore this. This is because this is where we find the order blocks, where we find where the sellers have put it, have put their orders. All right, they have placed their orders in those zones. The sellers and the buyers. So the support zones and the resistance zones are very important because those are the key zones where the orders are. Now, in this zone, around this place, around this point is now we find the order block for the buyers, the support level. All right. Perfect. I hope that is understood because from the illustration that I've given below here, you must understand the resistance. Let me just write it here. This is the support. This is the support. Resistance. Nice. That's how you identify it. Perfect. I think we're together up to that point. Now those are the points that helps us make decisions in the market. All right, there's the support and the resistance, the order blocks. We now know the momentum of the market. Now, so since we are now in the 15-minute time frame, we've already identified the support and resistance that we are focusing on. All right. And if we see at this support, this resistance level is where our trend line is marked at. So we are expecting this trend line to stretch to that point. Perfect. Number one, if this market comes and breaks this zone around here, changes this character, and comes to this point, if it comes to this point, I can confidently say I can put my entry, my short entry here, and target this. Oh, sorry. I can confidently say that I can put there and target this lower low here, all right? If the market comes to my zone. Perfect? Are you together? That's how I identify my zones. I use that the change the structure if it breaks through here. Now, when the market now comes down to my buy zone, I call out this the buy zone because it is now where the support is, all right? I can now expect another entry at this point here. Targeting this zone here. But my stop loss will be just down below here. We have a tighter stop loss a little bit. So those are the entries that I can be anticipating from this market according to the movement that I'm seeing right now, because when it breaks this zone, it comes here like that all together. So these are the zones I'm expecting right now as my entry zones, and I take my zones at the order blocks or at the buy zones that I identify. Sorry, at the buy zones that I identify. I think I need some water. That's how I identify my entries all the time. Perfect. So that's the entry that I'll be waiting for forward up to. Now we're currently on an running trader. All right, the trade we took the other day, and still running in good profits. All right. These are the zones. Okay, this is what today's analysis, and this is what we're expecting in this market. The market to come to this zone and come back down here or break like that. So that's our analysis for today. So I hope today somebody has learned something. All right. If there are questions, you just can type in the chat, or you can send us maybe a message in WhatsApp or Telegram, depending on where is best comfortable for you. Now, I want to share the current trade that we have running and see how we code those trades. This is the current trade that we have running. All right, we have these trades running, and we're in a very good amount of pips right now, and people took this trade the other day, and we're expecting it to break through here and come to the zones that we have marked in the other chart. All right, so that you can go to that zone and anticipate it. You can see how this thing is working magic, waiting for our key levels, our key zones, the resistance and support, and the order block zones. So that's all for today. I think we're gonna share that and wait for those entries patiently, guys. Don't chase the market. That's one of the things that I know. Don't chase the markets. All right. So let me now just share where we have our community. Now, what we've attached besides there is the chat, is our TradePilot community. What you do, you go to Play Store, search for TradePilot. All right, you find the app there, download the app, join it, and we'll be part of the community. All right. be part of a community there, and let's make this the perfect home, perfect place for all our traders. We're expecting to hit 5,000 people by the end of this year. So guys, let us be part of this community. For now, I think that's all I have for today. Wait for those entries patiently, and let's have a very perfect trade. See you guys. I think I'm ending the live session right now, and have a good day.